Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City. And, things have changed because of interest rates for investors. So, for the longest time, and I've been doing investment real estate since 35 years. I won't put an exact year on it, but about 35 years. We've always had positive cash flow. That has just been the nature of the Oklahoma City market because we're still the fourth most affordable metro area, over 1 million in the United States. But with that being said, prices still went up. And of course, during the pandemic, they really accelerated because of the supply chain. Well, and then interest rates went up a considerable amount. And so naturally, if you have to pay 3% or 3.5% more on your interest rate, it's going to affect your cash flow. And so all of a sudden, those numbers started coming down. Now, the interesting thing about pricing right now is even with reductions in the values that homes can be because of lower cost in materials and labor, they're really still a little bit higher than they were a year ago, but not a lot higher. And that's one bit of good news. Now the rates, we use buy downs to get those rates down, but still the cash flow is fairly close to neutral. Now, the question that investors are asking, and although we're starting to kind of ease this problem where people are kind of get it at this point, but it took a lot of talking, a lot of education, a lot of meetings, is that you can still make a lot of money even if your cash flow is neutral. Now, number one, think about it for a moment. If you invest in something, how many investments do you know that you can make where somebody's paying for your investment? Well, that's essentially what neutral cash flow to positive cash flow does. It pays for your investment. So that's number one. It's a washout, in other words. So, you're not making money on your income from an income point of view, but here's where you're making money in a solid market like Oklahoma City. It's in the appreciation. So even if we look at a year ago, we're still up 7% in appreciation overall. And that's existing, new construction, single family, multifamily, condos, everything. So you still have the values going up year after year. And I've always talked about the miracle of compound interest. So in other words, if it's 5%, for instance, and your first year of every $100,000 becomes 105, the second year, the 5% is based on 105, not 100. That's compound interest. And so when I do a return on investment analysis over 7 years, and I do what's called the internal rate of return, then it shows that even with neutral cash flow, not even positive cash flow, you're making anywhere from 12 to 17% on your money every year. If you look at stock market predictions right now, it's about 6% is what they're saying that if you're a good investor, you're gonna make, and you're still taking a risk. If that investment doesn't work out. The thing about housing is everybody's gotta live somewhere. You're either going to own or you're going to rent, but you have to do that in order to have a family living somewhere and a job that you can drive to. And so housing is a bedrock right and a bedrock thing that all Americans want. And so even with neutral cash flow, I can show you how after a 7-year hold, and you may hold it longer than that, which is a good thing to do, you're still making a lot of money. You are still building wealth. We're going to do everything that we can to make sure that you get positive cash flow, but it's still something I think is one of the best investments out there for someone trying to build stability and long-term wealth.